Hello and welcome. You're watching Your Trades on ET Now with me, Snehi Shah, and with me is Fmcg Singh. Let's take a look at how the market session has panned out for in today's trading session, and well, quite the volatile day coming in for Nifty, because remember we opened with quite the gap up start today. Nifty crossed 22,700 for the first time. So quite the gap up start for us today. Nifty small cap also was quite high in the day today, and Nifty Bank has also hit record high today. But what's key to note is all of these indices did not manage to hold on to those gains, have fizzled out in today's trading session, and around the middle of the trading session at midday today, that is when Nifty started consolidating and losing all of its gains. There you can see somewhere around that 12:30 mark is where Nifty started to drop in today's trading session. What was once at 22,765 as high as those levels managed to close at 22,642, but well, yes, a 22,600 level. So that's slight bit of a positive news coming there on the front of Nifty. Nifty has ended the day with a cut of 1/10%. Bank Nifty also slightly negative end coming to the day. Bank Nifty has ended the day on quite a strong. But it was Sensex that has ended the day slightly negatively. And when you talk about broader markets were also largely in tandem with the benchmarks, but it was the Nifty small cap that did manage to hold on to some amount of gains, rather flat but with a positive bias nonetheless. Well, that's the Nifty small cap index for you on the screen. When you take a look at Nifty 50 gainers today, you had Apollo Hospitals up 3%, Hindalco up 2%, and mind you, not only Hindalco, it was the entire metal pack that was shining today, because metal is the biggest sectoral gainer in today's trading session. Even when you look at the metal pack, you had Vedanta up almost 5%, MOIL, SAIL, NALCO, GMDC, Hindalco, NMDC, all of these stocks from the metal pack were shining bright today. Moving on, let's also take a look at some other Nifty 50 high performers today. You had ICICI, Bajaj Finserv, Infosys, Eicher, Grasim, M&M. All of these stocks aided the Nifty's move today. What weighed on the index on the other side, you had Titan, Coal India, Hero MotoCorp, Reliance, Asian Paints, Industrial Bank, BPCL, Tata Consumer, Ultratech Cement, as well as Cipla. So all of these stocks continue to weigh on the index today. Nifty Metal top sectoral gainer today, up more than 1%. Realty also, strong moves coming in from the Realty index today, and we'll tell you more about that over the course of the show as well. 0.5% higher is where the Realty index managed to close on the back of the for updates, especially today the update coming in from Ajmera Realty, very strong numbers over there as well. Moving on then, let's lastly also take a look at what happened among the broader markets. Then you had Hindustan Zinc, that stock has closed 16% in today's trading session on the back of the price rise in silver that came in. MOFSL, good move today. Sterlite, Hindustan Copper, Castrol India team leads, EID Perry. Now the entire sugar sector was also in focus on the back of that ethanol blending news that we got just a few minutes before the markets. So well, largely this is what has happened in today's trading session. Also on the back of QIP news, you had Shilpa Medicare and Sterlite Tech, both of them were in focus. But Shreyansi, what else happened in the market session today? Quite the volatile move, but lots of newsmakers as well.
Absolutely, lots of newsmakers and lots of exclusives for us here on ET Now as well, because we did have that news coming in that there's a facelift on the cards when it comes to the beauty space. And when you're looking, sources tell your channel that Reliance Retail plans to foray in the beauty space and is ready to launch its own private label brand as well. Now, ET Now learns that the new beauty products of Reliance will be launched in its Tira stores. We'll be getting you more details in the show about how many products they will be launching, as well as what the timeline looks like as well. Now, in terms of other exclusives, we also have Housing Ministry that has drawn out its first 100 days agenda for the new government and is looking to kickstart stalled projects, as well as looking at launching new home loan schemes for the urban poor as well. And buyers are likely to get 3 to 6% subsidy on home loan as well. So this is definitely an important story coming in, and we'll be getting you more details on this as well. And there's also joint audit by central and state GST officials that is on the cards. We'll be talking about that as well. But these are the kind of stories that we're looking at for today. We'll of course be diving deeper into all of these stories later in the day. But for now, let's get a sense of the picture that we have for the markets then. We're being joined by Ruchit Jain, who's the lead research at 5paisa.com. Ruchit, tell us a little more about what the market picture looks like to you in this particular market space. How are you looking at the small and the mid cap then?
Yeah, hi, very good afternoon. Well, we have seen recently after that 800 points correction in the Nifty, market resumed their uptrend. And it's not only that Nifty has made a new high, but also broader market participation has been there, where Nifty Midcap Index as well as the Smallcap Index have surpassed the previous swing highs. So the overall trend still continues to remain positive, which can be seen in a stock-specific buying interest from the broader markets. So I think one should keep trailing the stop losses higher and continue to ride this trend. A small resistance is there around 22,750, where we witness a bit of pullback move coming in today's trading session. But there are no signs of trend reversals yet. So until we see any kind of important supports getting break or trends getting reversed, I think in between corrections could be there because of overbought setups. But slow and gradual up move should be expected towards 23,000 soon. On the lower side, 22,400 to 300 is a support zone. Till that is intact, we expect the dips to be used as a good buying opportunities. And the broader targets are coming around 23,000.
All right, Ruchit, thanks for taking us through your view when it comes to the benchmark as well as the broad markets. But in a market like this, where we are seeing quite a bit of volatility playing out on an intraday basis, what are the stocks that you are picking up? How are you trying to beat this volatility?
Yeah, so for volatility, I think the one of the best thing that traders should now do is to keep position sizing limited, because one should remember this is not the start of an up move. We have already seen a good up move, and chasing the stocks at higher levels should be done with limited position sizing. So one should keep a very limited exposure when or rather I would say lower any kind of margin based buying here. So a couple of recommendations on the long side. First is a buy call in Larsen and Toubro, where this heavyweight has recently seen a breakout from a cup and handle pattern on the daily charts, which in technical analysis is a quite bullish pattern. The price moves have been supported by good volumes, where we have not seen any kind of high volume based corrections in this stock. So one can go long on Larsen Toubro, keeping stop loss below 715, expecting targets around 3950. And second stock would be a buy call in Apollo Hospitals. A bit of consolidation or correction was recently in most of the hospital names post the recent news flows. But again, after taking support around its 100-day exponential moving average, the stock has managed to show a gradual pullback move. Now the volumes have started increasing, so we believe that the stock would again head towards its previous highs. So Apollo Hospitals is a good buy over with stop below 6,330 for potential target around 6,800.
Thanks, Ruchit, for those two recommendations coming in, L&T and Apollo Hospital. But thank you so much for joining us on the show today. Moving on then, let's also keep it going with market commentary then, and let's also listen into what Manish Sonthalia, Chief Investment Officer, MK Investment Managers, is penciling in of the current market situation. What does he make of it, and what does he have to say about the power, infra, as well as capital goods sector?
Markets in general, on the benchmark, not very expensive. It's a given. I mean, 1150 on the Nifty in 2025 on Nifty 50 is not very expensive at 19.5, 20 times. Now, come to the theme, I would believe that it's all about the investment theme going forward. It's all about the order book. You're not going to see the earnings come through just yet. It's going to be back-ended, and when valuations do look slightly expensive. Some of them are trading at Fmcg valuations, so it's a pick and choose within that space. But I think it is all about your power sector, it is all about infra, it is about capital goods, it is about your somewhat positive on pharma per se. But I think on a broad brush basis, banks per se are going to see earnings led growth. So see, these are some of the themes which are going to be in the limelight, and within that you got to pick within the broader markets as well as the large cap space.
That's the word coming in from Manish Sonthalia, who believes markets are very expensive at the moment. But viewers, with that, we'll slip into a short break on this edition of Your Trades. We'll be right back with more news and updates about today's trading session. So you
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at how the derivatives roundup is shaping up like. And on the index futures, what the kind of trends that we're seeing for 25th April expiries, Nifty, it is looking a little bit flat right now. And for Bank Nifty, the long build-up that is being observed. Now, India VIX is definitely of a lot of importance right now because it's seen a cut of over 2% on your screens around 11.3 levels. Now, when I'm looking at active call levels then for 10th April expiry, call writing was observed for 22,700 and also for 22,800, and the resistance is around the 22,800 level as well. Now, in terms of put levels, put writing was observed at 22,600 and at 22,500. 22,500 is also forming a good support level coming in. We're looking at the 10th April expiry as well. So that is largely how the derivatives roundup is shaping up like.
Well, all right. So 22,500 on the support and 22,800 on the resistance. But with that, let's move on and talk about the big story of the day. And well, that has to be not only one particular stock, but let's talk about an entire basket of stocks, and that's the real estate pack. Now, that basket has ended the day with an uptick of almost 0.5%, the second highest gainer today in today's trading session after metal pack. Now, what's driving this growth for realty? Realty seems to be seeing no stop when it comes to moves in this sector, and the sector has been abuzz on the back of Q4 updates that the companies have been releasing, and mind you, most of them have been phenomenal when you look at numbers coming in this quarter. Let's start by looking at Macrotech, and brilliant numbers coming in from Macrotech. On the pre-sales front, it has met the guidance of 20,000 crore rupees that it had indicated at the start of the year. It's its best quarterly performance for Q4 ever. Its best annual pre-sales performance too, in line with the 20% growth like I had mentioned. For business development, it has beat its own guidance. They've added new projects having cumulative GDV of 20,300 crore across various micro markets of MMR, Pune as well as Bengaluru. The company had guided for 17,500 on this front and exceeded that with 20,300 coming in. Also significant reduction on its net debt. So that is Macrotech developers for you. Moving on, let's also look at another company that came out with very good results and a Q4 updates, pardon me, and that is Puravankara. They've achieved their highest ever annual sales at 5,914 crores in FY24. Also achieve highest ever quarterly sales value of 1,047 crore for Q4 24. They've also gone ahead and achieved the highest annual customer collection. Average price realization has also gone up by 2%. And management is also saying that they're now focused on replenishing their inventory when it comes to new land acquisition. So positive commentary and stellar set of numbers coming in from Puravankara as well. Moving on, let's talk about a company that came out with a decent set of Q4 updates, and that is Sobha. They've achieved their historic best sales performance across all sales parameters. Sales area has grown by 7.7% over FY23, and sales value registered growth 27.8%. Average realization has improved by 18.7%, also now at 10,992 per square feet, and they've also crossed the milestone of 6 million square feet of new area sales and 6,500 crore of annual sales value. So good numbers coming in from Sobha as well. Moving on, let's talk about Keystone, because on their pre-sales front then, for a year-on-year basis, they've seen a 78% jump coming when you talk at the Q4 this year versus Q4 last year. Look at FY24 versus FY23 for Keystone, up 41%. Collections is the hiccup when it comes to Keystone on a sequential basis, or when you look at the Q4 performance this time versus Q4 performance marked last year, there's a 4% drop coming in over there as well. Moving on, with stellar numbers is Prestige Estates then, 21% uptick on a Q4 this year versus last year basis for pre-sales, 63% uptick on the same metric when you compare FY24 to FY23. Collections have gone up by 26% this Q4 compared to the last, and realization has also seen quite the growth when it comes to on an annualized basis for 10,410 rupees for FY24 versus 8,812 rupees for FY23, up 18% year-on-year basis. Signature Global, very strong numbers coming in this company as well. A 240% uptick coming in for Q4 of this year compared to Q4 of last year when it comes to pre-sales. Even on FY24 compared to an FY23 basis, pre-sales gone up by 112%. Collections also up 71%, and average realization also has seen a sharp uptick at 11,762 this year compared to 7,886 Lastly, let's also take a look at what's happening with Ajmera Realty, because that company came out with its Q4 update today, and the key highlights are that sales area at 1,12,931 square feet, up 63%. Value also up 104% YOY for this Q4, and collections have also been up 91% on a year-on-year basis at 197 crore. So while stellar set of numbers coming in the real estate pack, and no wonder the real estate pack is up and away in today's trade. session, half a percent higher. But earlier today, we spoke to Dhaval Ajmera, the director at Ajmera Realty and Infra India. Listen into him and shares his guidance for FY25 and shares some more light on these FY24 updates. Listen in.
We have about 7-8 projects which we will be launching in this financial year, which is a top line of 3,000 crores. And more over and above that, there are a few more which are still under drawing boards, which we will be announcing soon. So this year, we are looking at a very buoyant growth plans, at least internally within ourselves. And definitely our internal target is to definitely surpass beyond what we have achieved right now. And we are at least looking at a uprise of 20-30% from the current year's previous. Our sense is the 7 projects which we have acquired this year, we will be launching in this current financial year. And all these are about 12 lakh square feet with a 3,000 crore top line revenue. I think the date for almost all of them will be between 3 to 4 years. So my sense would be at least 50 to 60% of this will be finished in the next 2 years. And thereafter, also our existing projects, which has already been announced, like Manhattan and Eden, Freeway, all those projects will also be completed in the next 2 to 3 times. So overall, I am seeing at least this 3,000 crores of revenue, at least 50 to 60% of it being recognized, as well as the existing projects, which are about 2,500-3,000 crores, will also be recognized in the next 2 years.
That's the word coming in from Ajmera Realty then. What a strong set of numbers, and I can't look away from the screen when it comes to the realty sector because there's a strong set of numbers across companies. But moving on then onto the road ahead. For the FMCG sector, we caught up with Sunil Duggal, former CEO Dabur, Akshay D'Souza, Chief of Growth and Insights Bizom, as well as Abneesh Roy, Executive Director, Nuvama Institutional Equities. Listen in to find out the roadmap that they're penciling in for rural recovery as well as growth in the FMCG sector.
We do expect growth to be in the low to mid single digits in the first half of the year, even though there are some tailwinds with regard to a good Rabi crop, etc. But overall, the demand situation remains muted. My concern going forward is not so much on the top line, but on the margins.
An early summer that has come in, I think, is definitely going to be positive for a lot of categories. However, there is definitely a headwind from a confectionery and chocolate space where cocoa prices have soared. Most other discretionary products, we are seeing an active participation of brands in trying to even correct prices so that they drive consumption. So I think don't write off rural anywhere. I think it's just a season away from getting back into action.
Rural recovery is still awaited. My sense is in FY25, with a normal monsoon forecast and local players' competition getting adversarized, I would say that rural recovery can potentially start from Q2 FY25. Because of the gross margin pressure coming back, consumer companies will take a price hike. We have already seen in cocoa and coffee, a lot of players thinking of price hike. They have already taken. So that will also aid the overall revenue recovery.
All right, that's the word coming in from the FMCG players and analysts across the board. But let's take a look at all the other stocks that were big buzzers in today's trading session. And Gaurav is here with a list of all of those. Gaurav, over to you.
First, talk about sugar stocks because they are definitely going to be in focus for a few days because as per sources, now government may divert more sugars towards producing ethanol. And on back of we saw Balrampur Chini, Sri Renuka Sugar and some other sugar stocks reacted positively on this news already. Let's now talk about Bharat Electronics. As per sources, company is likely to get an order which is going to be worth more than 6,000 crore rupees. And given that the company's order book stands at more than 33,000 crore rupees, it could be a big move for company to begin its year FY25. And that is this stock also reacted positively on the back of this news. Now let's talk about Can Fin Homes because Morgan Stanley now believes that this stock can actually outperform broader index in the next 60 days because they believe that Q4 results could be strong for the stock and at the same time we may see some positive impact in the asset quality as well. And on back of this, they have now maintained their target price 1,000 rupees but are being bullish on Can Fin Homes. Next, let's talk about Vision because recently there was a search operation taken by GST officer on its outlets and showrooms and the warehouse in Uttar Pradesh, and as per company, this is going to impact the business in a way that this will limit the sales from 3 stores and block the stock of 7 temporary warehouses for the company. And on back of this news, we saw there was a negative reaction in the stock price as well. And lastly, let's talk about Natco Pharma, because company recently received a warning letter from US FDA, and because of this, there may be delay in the pending product approval from the site which is situated in Kothur, and on back of this, we saw negative sentiment hitting up this stock as well. So all in all, we will definitely keep an eye on these stocks in tomorrow's trade as well and see how they perform.
Thanks, Gaurav, for that list of stocks that were buzzing in today's trading session. Moving on then onto an ET Now exclusive. We learned from sources Vodafone Idea is hard selling its FPO to over 250 hedge funds. Somit Sarkar is standing by to give us a glimpse of what is being conveyed to prospective investors. Somit?
Well, as we all know that Vodafone Idea has been holding a lot of road shows because they plan to raise around 20,000 crore rupees from external investors, and they aim to complete this by the end of the first quarter of FY25, which is in the next 83 days. So what is the company actually communicating to its prospective investors? What we understand from our sources is that the company is aiming to achieve a revenue of close to 75,000 crore rupees by FY26 as against 42,000 crore is the current run rate that we have been seeing. Because of this rise in revenue, they are expecting their cash EBITDA to also increase around 13 to 14,000 crore rupees from 8,000 crore rupees, which is the current rate, and which will be the factors that will actually aid this kind of revenue growth. Firstly, they plan to add around 1.4 crore subscribers every year over for the next couple of years, which means that total of 3 crore subscriber addition that they are aiming for the next 2 years. Now, do remember, in the last 4 years, the company has lost close to 8 crore subscribers. Apart from that, they are expecting tariff hike of close to 20 to 25% post-election, and for FY26 also they are expecting a tariff hike come in, and they are expecting all the telecom players, that is all the private players, to participate in this tariff hike. Other than this, it's the migration of 2G customers to 4G, which will aid the ARPU growth and the revenue growth going forward for the company. Now, do remember that Vodafone Idea has close to 9 crore 2G subscribers on its network, and they're expecting these subscribers to upgrade to 4G or eventually 5G going forward. Now, how the company planning to use the fund that they're going to raise? Now, most of it will be used for capital expenditure. Now, do remember, due to lack of capital expenditure, the company is to start 5G services, and hence it is lacking behind. And for the next 3 years, the company has planned a capital expenditure of close to 50,000 crore rupees, and nearly 45% of this capital expenditure will be used towards augmenting the 5G services in the country. Apart from this, the company also expecting their debt to come down by around 35,000 crore rupees. This will be related to the government AGR dues, because they are expecting the Supreme Court to accept or to approve the reappeal that they have filed for the AGR dues, and hence the debt reduction of around 35,000 crore is expected to happen anytime soon. So these are mainly the view that they are giving to prospective investors going forward. Now, we tried to reach out to the company and to get comment on this. However, the company has yet to respond to queries on email.
All right, Swami, thanks so much for taking us through the sauce-based story that we did see incoming today for Vodafone Idea. That stock by 2% in today's trading session. Let's see what happens to the stock tomorrow as the market digests this news. But viewers, with that, we're completely timed out on this edition of Your Trades from Jain and the entire team that put this show together. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.